I think we're going to have a bombshell episode for everybody today. We got Jacqueline Marshall with us. She's going to be talking about flips, getting into investing, leaving your daytime job, and scaling up into commercial multifamily properties. So without further ado, let's get into it. So Jacqueline, why don't you give us a little bit of background on yourself? Tell our listeners about you and where you came from and how you got to where you are today.
Yeah, I've been on the real estate train now for 7.5 years. And prior to that, I was a full-time dental hygienist. And 3 years into that career, I was not enjoying it as much as I thought or hoped I would. And I was really not happy and dreading the fact that this is my career now for the next 25 or 30 years until I retire. And I had a full-time job at a fairly decent office, but it was like a 2-hour drive from where I lived. So I put my house up for sale. It did not sell. So out of frustration, because I wanted to move closer to where the office was. And so I rented it. I had no idea that you should tenant screen anybody. I had no clue what the heck I was doing. And so I bought another house with the idea that, okay, I'm going to keep on, doing dental hygiene. But a few months after, like I think 2 or 3 months in that second house, I was like, you know what? I'm just going to fix this up. I'm going to rent it and I'm going to go buy another one. And so I kept on doing that. And I got up to 6 single family homes. And then I had a conversation with my realtor. And this is so important to have an investor friendly real estate agent, because he's also a landlord himself. He owns different investment properties. So he understood what I was trying to get into and do. And I had a conversation with him about what other options I had for investing, and flipping stood out for me. And I started flipping houses and I just loved it. I started with lipstick flips and just things that really benefited from cosmetic updates and things like that. And just learned the ropes as I went, and self-taught. I went to YouTube University. And
so when you're first getting started out, like you got up to 6 single family units, how long did it take you to get to that point where you had 6 rentals just working for you?
Yeah, almost 3 years, a little bit like around the 3 mark year. It took me about 3 years to get that.
Perfect.
So yeah.
And how many rentals did you have when you decided to finally call it quits for your dental hygienist position?
I walked away from that when I got into flipping. So for me, I really, even though I didn't have any experience or anything like that, I just saw the potential of flipping. And so I just went all in and I walked away. I gave my office a 2-week notice, and I'm like, I hope I'm never back here again. Sorry, not sorry. And I just went all in. I put in 12, 14-hour days and cried a lot. And and I just suffered through it. But at the end of the day, I loved it. It was exhausting work. It was frustrating because I didn't know what the heck I was doing. Like even laying floors at that point, I was watching a whole bunch of YouTube videos just to learn how to lay laminate flooring. So it was hard. It was hard, but I kept with it. But the reward was just phenomenal. So I was like, bought another one, kept on going.
Yeah, I think a lot of times it's the reward, not only monetarily, but also like you get this sense of accomplishment. Like this is something that you are doing. You are providing value to yourself. You are providing value to your buyers, to the market. And in turn, you end up being rewarded financially, but you're also relying solely on yourself, self-sufficiency, basically.
Yeah, for sure. I mean, I worked 12-hour shifts at the office that I worked at. I worked 12-hour shifts, and until I got a house closer to the office, I was literally driving an hour and a half or 2 hours to the office, working a 12-hour shift, 5 days a week, every second Saturday. And so it's not like I was putting in any more or less hours, flipping my first couple of houses, but I was working on my own terms. I was my boss. Everything depended on me now, I wasn't relying on an employer or anything like that. And it was hard, but I was more fulfilled and happy in here. And I had more control over my financial future, I felt.
So I want to get into this real quick. Did you have like any sort of handy background besides, working on people's teeth and rebuilding, that smile before you decided to
Yeah.
like start fixing up houses?
And it was an environment that I was comfortable in. My dad owned a construction company. He was a developer. He started with a little red truck when he was like 15 or 16, I think, and back home in Newfoundland, which is where I was born and raised. And he just kind of developed his career, and he ended up being a developer out in Victoria area, out in British Columbia. So it's an environment that I've grown up, I've been in, and I don't know, I'm comfortable around it. And I think it's in my blood, I think it's in my blood. And it was just, I was meant to do what I'm doing.
Well, I think that's great because it sounds like when you met that investor, real estate agent that you were working with, he started rattling off all the different ways you could get involved, and
Yeah.
you cued in on something that you had a skill with, like something you would
Yeah.
be comfortable with that you could scale and grow. So I think that's important for people to realize is, do your self-assessment and figure
Yep.
out what your skills are that you can apply them to the path you're going to take. That'll take you a lot further.
Yeah, I think it's important to take inventory of what skill set. You may not have any experience, which is what I didn't have, but to take some inventory, or even just a passion is a good skill set, I think, to bring into something, into the unknown, because it's going to get you home like on those long days, which are really frustrating. So you got to have a lot of passion for what you do, for sure. Yeah.
Exactly. So let's rewind a little bit. Just a second here, because you said you had 6 single families before you finally like took the leap, went all in, and started flipping, that first house. So I'm not really familiar with like the Canadian market and how much things cost, and what potential cash flow you can kind of have. So with those 6 properties, how much were you kind of cash flowing at the time? And kind of what did you pay for some of those?
Yeah, for sure. So the one that I was working on today, doing drywall repairs, I'm doing a tenant turnover there, and that one used to be my personal home. So that was my very first rental by default, because I wanted to sell it. And if it had sold, I don't think I'd be on this journey. I don't. So I think God was looking out for me on that. He made sure it didn't sell. So but that house, I bought it for 192. And when I rented it, I lived there for about 7 or 9 years myself before it became a rental. And then, so when I started renting it out, I rented it so it's been a rental for 7.5 years. And I started off at 1,200 or 1,300. And now I'm getting 2,300 plus, 2,300 plus utilities for it. And if I wanted to sell it, I bought it for 192. And if I wanted to sell it, I would probably get 750 for it.
Holy cow.
And that's just one. And then another one I bought for 144. If I wanted to sell it, I would get like about somewhere around the 500 for it, just because of where it is and how the value has gone up over the past 7.5 years. It's crazy.
So
the light bulb has gone off. Like this is my retirement. This is my.
Did you purchase those with loans, or did you acquire them with cash? How are you financing these deals?
My rentals are with a bank, CIBC, and so all the rentals have a great mortgage on them with one of the big banks here in Canada. When I started flipping, I bought them in cash. I bought them out of reserves that I had in my own personal thing, and because I wanted clean offers too, like I wanted to beat out the competition. So I just went in with cash. And then I evolved into, as I got established, I had lenders that were approaching me with a flipping lending product. And that's helped a little bit. And then for the multifamily, I got that through CIBC.
Gotcha. So, looking kind of at your business, you got the single family on one side with those 6 units, and then you're getting into flipping. Are there any differences between the properties you're looking at physically, like any attributes? Are you buying rentals and, type A neighborhoods and like flips in different kind of areas, or are these all the same kind of properties that you're going after, flips and rentals?
Yeah. The single family homes are definitely in a more type A profile type of tenant. It's very like, I get lawyers, I get teachers, I get nurses, I get executives and things like that. So they want particular features in the house. They're expecting a certain type of thing. And they're very low maintenance. They're very low maintenance tenants, which I appreciate. The fourplex, that's a little bit different. I did a lot of revamping on that fourplex because the type of profile of tenant that was in there, I didn't want to get them out, fix it up, and then get the same type of tenant back in. So initially when I bought the building, it had coin operated laundry in the basement. So one of the things that really put up value, and before I bought the property, I talked to my lender about what my intentions were with this property as well, that I planned on putting a lot into it. This is the type of tenant, this is the type of rent I'm going to get now, and this is what I'm hoping. And are there any type of renovations that you think I should focus on to really get me to those numbers? So that's one conversation I had with my lender before I even bought the building. But so I went from basement laundry to in-house stacked washer and dryer in each unit. So I had my plumber put all that in, and then on the top units, I had them also put in the bathrooms, there's a floor drain. So which the insurance companies and my bank really like that feature as well. So that went a long way, things like that. So you just kind of learn these things that make such a big impact on the lender and the insurance companies. So at least here in Canada, so I don't know.
That's a huge nugget, because I've really never had a conversation about like what my renovation kind of intentions were, what would really bring more value besides, besides what I knew the rents would be after I fixed it up, never really got into any of that. But, let's break down this deal a little bit, because I'm really interested in this. So, what did this 4-unit cost? How much did you put into it? And, what were the rents before? What are they now? Like, let's kind of dive into this one. This seems like a good one.
Yeah, no, for sure. But just before I touch on that, I just want to point out that it was me, my lender, and my accountant. We had 2 phone conference calls about what I was purchasing and what my intentions were, so that my accountant could have things up, because things have to be set up, and I was going with the bank, and so I wanted the bank and my accountant to be on the same page about what my needs were to get approved for this, and about the renovations and all of that stuff like that. So I highly recommend that everybody be on board, your lender, your accountant, whether that's a private lender or whatever. So I know it was very instrumental. So then when I started the borrowing or refinancing process, I already had a heads up, or I've had that conversation about what the bank was going to expect from me to kind of, mitigate and get through that with as little headaches as possible, because it was my first experience. So yeah, so communication is key. Communication is key. Okay, so what did I buy it for? So I'm going to round the numbers up, okay? Just make it easy. So I bought it for $500,000, a little bit less, but $500,000, and I went in with a budget of $120,000. The rents were between $800 and $900, and I wanted to bring them up between $12 and $14. So it went from the type of tenant that you had in there. The building, it had good bones. It had a brick exterior, which I found very valuable. And I knew that with the right renovations and curb appeal and what I was going to do in the units, I knew that this was going to attract this type of tenant, no problem. And when I told my bank that my history of how I've done things and my flipping and everything like that, I was able to bring all that history into that conversation that we had, and they had faith in me. So that helped getting approved by the bank as well. So whoever your lender is, cultivating that relationship is very important, and making sure that your track record with them is on point, and because that builds up trust. And so I think if I hadn't had a history of having 6 mortgages with them for the rentals, if I had walked in and said, hey, I want financing for a fourplex, it might have been a different conversation, I think so.
So let's talk about that a little bit, because when I speak with new investors, they get very hung up on finding the best lending terms, best deals. maybe at the expense of relationships, because,
Mhm.
sometimes if you're going to build that relationship with one particular business or service provider, they might not be the cheapest person every single time, but
Mhm.
as you have that repetition with them, you're going to build that, that portfolio of experience, and they're going to find you to be a very reputable customer. So, have you? Has that kept you from shopping around lenders, just because you've had that experience with them? Like, you trust them to close your deals at this point?
The bank did let me down at one point. It did. So I mean, as good as that was, but I was just getting into it, like flipping and everything like that. Um, and to save a deal, I did go to them and say, "Hey, can you finance this for me? It's a flip," and they didn't want to do it. But I didn't have any flipping experience, and I ended up going with a private lender for one deal, and the interest rate, it made me sick. I didn't sleep at night, I had to pay for the lawyer fees for the lender I think the interest rate was like something like 9 or 10%. And there was all these other fees, and there was like, I was like, oh my God, if I don't pay this back, are they gonna come and give me cement slippers? Like it was so it was so freaking stressful. But anyhow, I'm glad I did it. It was very scary, very stressful for me, but I'm so glad I did, because that flip, despite the high interest rate and all the other costs, I walked away with such a fantastic profit margin. So yeah, you just got to do your numbers and write it out and go, okay, I know it's scary, I know it's high, but so it can work out if you know how to do your numbers, I think, because I'm so glad I did it. I'm so glad I did it. So it was
Yeah,
scary though.
I think that's really, really key point that you just pointed out there, is that yes, sometimes it is scary. You didn't
Mhm.
sleep at night because you didn't have a track record yet, and you knew that you could do it. You knew that you did all the research for your numbers, and as long as most things worked out, it was going to work out, but it still hadn't
Mhm.
worked out yet. So, but you had that like drive to push
Mhm.
through and just go, I got to do this. I got to make it happen. Hey, the bank said no. Here's another option. I can
Mhm.
still make it work with that option. And then when you did, then you got to go back to the bank and say, hey, I know you didn't lend to me on this one, but here's how that one turned out. How about we do business now? You know?
Yeah, yeah. It was, I mean, I already had my rentals, but it was a flip, and I didn't think that they wanted to take that chance on me and with the flipping um, at that point, because it was like my first or second one. And yeah, it was scary. But the point is, though, like, if you will get a lot of no's, I think, with lenders, but the point is, don't give up. You might get 12 no's, but just don't accept no as the final answer. Just don't. Go and find your person who's going to say yes to you and keep going. Because if I hadn't and quit and said, oh, okay, well, they're not going to let me, maybe it's a bad idea, maybe this is like, a sign that I shouldn't be doing this or something, right?
Right.
If I had taken that or accepted that, I wouldn't have continued on. I wouldn't have continued on. I wouldn't have the fourplex. I wouldn't be doing what I'm doing now with the burring process funds. So yeah, so don't take no for an answer. Screw that.
Absolutely. I'm working with, I just finished concluding a deal with one of my clients who had to go through 5 different lenders to get to the yes and to get to the
Yes.
closing table. And
Mm-hmm.
each time we would get to like 95% of the way towards through the underwriting, the deal closing, we're ready to get there. And then some sort of oddball thing gets thrown in our face.
Yeah.
And my first instinct representing him as the buyer's agent was like, oh, this deal's dead. And like, too
Mm-hmm.
bad, so sad. Like, it's terrible. Client's going to lose money. But he had way more persistence than I think I would have ever had in a situation like that. And he's like, nope, we're going to figure it out. We're going to put more money down on due diligence. We're gonna find an answer. Go to the next lender. Some different crazy oddball things pop up with that lender. Got to go on to the next one. Literally got to the 5th lender. Refused to say no. We closed on that deal last Friday. And he's a happy investor in the deal that he's got into. He's got really big plans for his property, but just goes to say, like, don't accept no for an answer. There's always a
Yeah.
solution. Don't be one of those people who says I can't. Figure out how to
Mm-hmm.
say I can. How can I?
Yeah. Exactly. You won't last very long if you don't have a tough mindset, you know? You got to have a tough skin, I think, or thick skin to do this. So,
So true. So true. All right. So you've got some rentals, you've done some flipping, you get into a four unit. You're doing some burrs, like you're recycling that same money over and over and over again, refinancing. So let's fast forward a little bit and tell us, what your portfolio looks like now. And what are kind of the plans for the future? Like what's your goals? Like where are you headed?
yeah. So, I mean, I have the 6 single-family homes, and I got the fourplex, which I'm just wrapped up the refinancing process. And for the past 2 months, I have been looking for the deal that will work for me. I want to go bigger, and that's either going to be a bigger multifamily, maybe 16 or 20 or 30 unit, whatever. I don't think I want to go over 50, but you know what? At the price is right, I'll say yes. So, but I would prefer a commercial mix, like apartments upstairs with leased businesses downstairs. That is what I really want to get into. I would love to start getting into eventually strip malls and things like that, and get away from having family tenant types. So, yeah, I would love to get into strip malls and stuff like that. And yeah,
Well, let's talk
maybe
about that a little bit. Like, what's motivating you to get in strip malls? Because I think I'm might be sharing that same thought process, managing a different kind of tenant. But why don't you
yeah.
walk us through that kind of why your goal is to take your portfolio in that direction?
I think it's going to be more money. It's going to be more profitable. I'm hoping, thinking. And I just want to try on that style of tenant, like maybe getting into the triple net leasing. I just want to try it on for size and just see if it is for me. Is it more profitable? Do I have more lending leverage power because of it? What kind of conversations is it going to allow me to have with lenders now? So I'm willing to try it out. Worst case scenario, I sell it. If I don't like it don't work out, I just sell it and go buy another apartment building.
Exactly. Well, I think
So,
that's an amazing progress when you go from a couple single family rentals to flipping to
mhm.
buying a fourplex to now you're like, all right, the bare minimum is going to be 15 to 30 units. Like you've got that confidence now. I mean, you have been
Yeah.
investing for a while, so you know what you know. And I'm sure
Mhm.
you've been thinking about this for a long time, but now you're ready to step it up to, the next level. You're going to jump straight, not go to an 8 or less than 10, but more than 4.
Mhm.
You're like, hey, let's get somewhere in the 20 range.
Yeah.
um
Well, there's
which is
another reason
fantastic.
why too. Sorry. There's
Go
another
right
reason
ahead. I
why
was
I
just
want to
saying.
do that, because I self-manage right now, because there's the to have a or a property management company is not it's going to eat away my profits. You know what I mean? So I want to get into a bigger apartment building so that I can warrant the cost of a property manager. Now I can afford it, and not take it on. So that's another reason I want it to be a little bit more passive for me, but I have to be able to afford that passiveness, if that makes sense. So,
Makes complete sense. I mean, I've got 23 units and we self-manage. We're about to add another 7, and I'm still trying to figure out that number. I think for me
mhm.
it's like when I hit 50, I'll like push that off. But yeah,
Yeah,
I mean, if you're talking 10%, 8 to 10% of your
yeah,
gross rents, and a lot of your rents are $1,400 a month, now all of a sudden you just cut your cash flow
mhm.
significantly, because
Yeah,
that comes off of the gross, not the net. So that 10% off of gross is like 20% off your net. So yeah, that
hmm
makes a big difference. What do you
Well,
got, James?
especially in this market where it's, surprisingly difficult to find a good deal on market, on MLS or whatever. When you're self-managing, you can add that into your pro forma and your numbers, and you
yeah,
can make a good deal work if it's not necessarily
hmm
going to work with third-party management. So there's a
yeah,
huge benefit to be had there for that reason.
yeah, for sure.
Great. So,
Yeah,
Jacqueline,
so
why don't you tell us a little bit about like your why? So, what is motivating you to grow your portfolio, continue with these flips, have all these investments? What's motivating Jacqueline to take over the world here?
Money. It's plain and simple. I hygiene was not going to bankroll the life or retirement that, or the health care that comes with age if you are blessed to live that long. And I just didn't want to have to worry about any of that. I just want to have a good life. And I mean, I have no designs on having a private jet or anything. That lifestyle doesn't appeal to me whatsoever, but I just want to live life on my terms and just not have to worry about, retirement and travel. If I want to go spend a month in Tuscany and learn how to cook and go to Paris for a month or whatever, I just want to work hard now and be able to bankroll all of that, for myself down the road. So
I love it. Let's put that into perspective a little bit. Like what is that number for you then? Like it might not be private jet numbers, but like
although that would be nice, a private jet, but
no one's going to complain about it. But what would that look like on a monthly cash flow basis for you?
Gosh, I don't know. If I really want to do it, I think, maybe $20,000 a month.
Right.
That's a great number. That's a fantastic number. That's where our number is too, is right around that 20,000. I think you can live a great life. I mean,
you can. If you can't, then you might need to reevaluate your lifestyle.
Yes, and everybody forgets that 20K, from cash flow is like almost 35,000 from a W-2. So you can stretch that money a lot further with all of the tax benefits and everything else, especially here in America. I mean, I'm sure there's some great tax benefits about real estate investing in Canada too, but I know I'm not very well versed in them. But yeah, 20K a month is definitely a great play. Where are you at right now? Are you halfway there? A quarter of the way there? Like where
I would say
at
I'm 1/4.
A quarter of the way there.
1/4 away.
So that's why you kind of want to like, all right, accelerate that a little bit. And that means you got to go into bigger properties that are bringing in more rents. So do you have an idea of, what that price point's going to be on that next property? Are you going to need partners? What's your kind of strategy there?
No partners. I don't want a JV partner in terms of like, oh, they own part of the asset. I'm the only one who's ever going to own what I own. I'll borrow money from you to buy my asset, but I'm not going to share my asset with things. I'm never going to go on the deed. So what I've been looking at, like the past 2 months, I've been looking at deals, whether it's mixed commercial or bigger ones. The prices are a little bit staggering. And I'm not locked in on one geographic area. Like I'm willing to buy this wherever and then really vet a good property management company, pay them extra if I have to, just, but the numbers so far, I show up and I don't have a problem with what they're asking for it, but my Lord, the amount of work that it needs outside, there's so much deferred maintenance outside. And it's just like, by the time you fix all of that, you're looking at $500,000-$700,000, and I'm not going to be able to increase the rents enough to, make that work. So
a door, $500,000-$700,000 per unit, or $500,000-$700,000 to actually fix up everything.
To renovate, renovate. Yeah. Like I have a pretty good idea about how like rental budgets and stuff like that. So I know what things are going to cost. And I mean, if you got to put that kind of money, for me, the buildings that I'm looking at, it's just not going to work for me. If I bought the building and kept deferring that maintenance that it needs, I'm just going to be stuck with the type of tenant that's in there right now or in and around that, so that would be problematic for me. And I don't want to get stuck or get into trouble or just like, oh my gosh, I have to sell this. I can't take it to the finish line. So
yeah. So are these like $2 million properties? $3 million properties?
No, this is all like less than $1 million. I've been looking at stuff between like, I think the cheapest one was up north. So obviously the more northern Ontario you go, you get more bang for your buck, but then you got to look at the town and all of that. You got to think of all those things, and you got to look at the income that's possible. It's like, okay, I fix this up, that's great, but now does this town have that type of tenant that would want to pay this type of rent? Is the job opportunities here in this town, right? So I mean, I could get there was a motel, for heaven's sakes, $500,000. It was like I could have turned it into a hunting thing, like one of those hotel motels. It was a hunting lodge way up north, so $500,000. And it came with a restaurant and a gas station, and I was like, oh my god. So it all depends on where it's at, So
Yeah, that makes a lot of sense. I mean, a ton of sense. I'm a little bit of perspective, since because you spent 500 grand on a fourplex, a little less, so you're all in around 6, and now you're looking at like $1 million properties that offer 3 or 4 times more units, so just trying to
But
get.
see, I bought that multifamily, the fourplex. Sorry, I bought the fourplex in a community that I had been flipping in for over 2 years. So I knew the structure down there, and just the jobs and the infrastructure. And I knew that if I did what I did, I knew that there were tenants. I was going to have no problem finding a tenant that would want to live in that type of building and pay this type of rent for it. So yeah. So I was familiar with the market where I bought that. Absolutely.
So looking at kind of where you are now and where you're trying to get, what would you kind of name as being your biggest obstacles to get over and across to, for example, get to that next deal?
I don't know. Maybe just pulling the trigger on something and going, hey, like, maybe this is making me go, but maybe I should just pull the trigger on it. I don't have a problem finding leads or anything like that, or being able to assess it and round it up like very quickly. Like, yeah, I should move forward. I shouldn't move forward. But I did just wrap up to the refinancing too. So on the fourplex. So I literally just got the funds, like, to move forward and things like that, and got that all wrapped up. And I got the final number of what I got out of it. So yeah, I don't know what the obstacles are. I don't know. I just need to pull the trigger on something, I think.
Well, I've always found real estate to be a numbers game, like on 2 fronts. You crunch the numbers to know whether or not it's a good deal. And then you just got to submit offers, and, eventually one of them's going to get accepted. And, I tell my clients this all the time in this market, we're going to have to submit quite a few, and it's okay to be rejected. It's okay for people to tell us no, because the right deal is out there, and you just got to keep taking stabs at it until it finally, lands.
Yeah, absolutely. Absolutely.
I always, I mean, I did, I was in sales for over 10 years, and I always told everybody, like, every no just gets you closer to your yes. So every one of those offers that you're putting in to get rejected, it's just getting you closer to the one that's going to get accepted at the terms that you want, at the price that you want, at the renovation that you're willing to put in, and at the returns that you're going to get, So like you said, it's just pulling the trigger on when someone actually accepts an offer, or being willing to get competitive enough to get an offer actually accepted, So kind of a couple of different things there, but yeah, that's fantastic. So, and I think right now too, with just closing that refinance, you're kind of like 2 months after doing all of that work and finally getting that reward, you might be like, well, just let me take like another month or 2 until I really hone into like jumping into this next project. Do you feel like you got a little bit of that going on, or no, you're just ready to dive in? And
yeah, no, I mean, I've been trying to look for a deal that I want to sink my teeth into for like the past 2 months. But I mean, this was a learning curve too, because this was my first time ever. I have never taken any equity out of my 6 single family homes. The money is all there. And I don't know what I want to do with all that equity, to be honest with you. But this was a learning curve. It wasn't as hard or scary as I had it out in my mind either. So that's really boosted my confidence, and it's been really reassuring. And but if I go bigger, I'm not going to be able to deal with CIBC banks, because they don't deal with commercial or anything like that. So I'm going to be dealing, but they do have people that they're going to refer me to, so that if I want to stay with a bank, they're going to set me up and do that networking for me, I guess, and introduce me to somebody at a bank that does do commercial. So I think it's going to go pretty smoothly. And if it doesn't, then there's a solution to every problem. So I'm just gonna have to figure it out, and not discourage or throw the towel in. Like there's a solution to every problem. So I'm just gonna have to figure it out. And because what about if I change my mind and want to buy a private jet, with my name on it in pink?
Exactly.
So,
Exactly.
I gotta keep going. I gotta stay in the race, So.
Well, one of the really good things that you have is because you haven't refinanced all of those 6 single families, you have all that equity in there.
Yes.
Your net worth is going to be high enough to when you go buy this $1 million or $1.5 million property, you're not going to need a cosigner or somebody else because you have the net worth to be able to do that. So that's fantastic. And I think that's a perfect segue into our last segment of the show that James and I like to call the Big Four. So James, kick it off.
So Jacqueline, I want you to tell us something that you do that just feels like a financial independence hack or a cheat code, something that kind of propels you further along your path financially.
I don't think I understand the question. Like, what do you mean, like a cheat code?
Like a personal finance, like a personal, something you do with money that kind of separates you from average people, something your average person might not think about doing with their money.
I live well below my means. I don't know if this is the correct answer, but I live well beneath my means. I mean, I can afford this, but I live down here. And my mom, she just said, like, always live beneath your means and you'll never run into trouble. And I've taken that advice and mindset into this endeavor that I've been on now for the past 7.5 years. And I just have that in the back of my mind, like, okay, just don't bite off more than you can chew or whatever, and just keep ahead, like, your head afloat, and you'll never run into trouble and you won't lose everything. And if you do lose everything, well, oh well.
Well, I think that's a perfect answer. I mean, that's really the key to financial independence is living below your means. You can try to project wealth and buy everything that looks fancy on the exterior, but behind the scenes, you're not going to be qualifying for those $1 million properties because you're just not going to have the financial backing to do that. So living below your means, it's a great first step for anybody to take to get to that financial independence.
Yeah, don't get that lifestyle creep.
Exactly.
That's right. That's right. All right. So the second question we have for you, we call this one resources. So is there any particular books, podcast, or people out there on the internet that have inspired you or helped you to get where you are today that you think our listeners might benefit from?
There's one book. She was a guest speaker at the inaugural conference of the real estate investor down in Charlotte this past year. It was their inaugural conference, and she was a guest speaker there. Her name was Evie. Her last name begins with a P. It's Greek. I'm going to butcher it if I try to say it, but her book is called Bulletproof, and it is just a frigging phenomenal book. I've read it 1.5 times now. I'm reading it for the second time. She's just a phenomenal. And the fact that I got to meet her, she was just a lovely person. And then another one is Sustain Your Game by Alan. I want to say Stein Jr. I think it's Alan Stein Jr., but it's Sustain Your Game. Just a phenomenal book. I heard about him on the Ed Milet podcast. And I love Ed Milet podcast. He comes on every Tuesday. And so just to get out of the real estate only thing, I like those books. I like those podcasts because it's so, I don't know, it just empowers your soul, your mind, your heart. And it's just so inspiring. So. Yeah.
I love those too. James, 1 second. I absolutely love those 2 books, that podcast. Ed Milet is fantastic. His new book, The Power of One More. I bought it.
I have that
great.
book. Yeah.
And like you said, sometimes you need to get out of the real estate and financial independence books and mindset and podcast all the time and really just focus on personal growth and development. And that helps a lot. And I also just found out Ed Milet is our biggest competition on Tuesdays, James. We might need to change our day.
No. Well, yeah, I think Ed Milet, he's crushing it, and he's putting out a lot of great content for mindset. And I've found that personally, any roadblock that I've been facing has not been a technical roadblock. It's been a mental self-worth kind of roadblock. So once you're able to get your mind around, the mental aspect of it, that really removes roadblocks to getting ahead in life.
Yeah.
Financially, personally, business-wise. But I don't know, Patrick. I think we can outpace Ed Milet after maybe I don't know, millions more followers on Instagram. So if you're listening, go follow us on Instagram. Help us catch up to Ed Milet.
I know, right?
Yeah, right. All right. So Jacqueline, this is our third question. We're going to call this one the future you. So I want you to paint a picture of yourself and your life 5 years in the future. Like what are you doing? What do you got going on? Either personally, are you flying around in your pink painted jet, going from vacation to vacation, or what are you doing in your business 5 years from now? Like, give us a little bit of a snapshot of what you're doing.
I hope my brand grows to the point where I'm the Canadian Joanna Gaines.
I love that. I love that. Sure.
I'm working hard. I'm working hard on that, building my brand, and it's just building it up and doing my thing and be the Canadian Joanna Gaines. Yeah.
I like it.
I love that.
Well,
I love that.
That's very actionable. I love those kind of comparisons. Gives you something to strive for. I remember listening to, I think it was Jake and Gino multifamily podcast, and they would always say they want to build a multifamily business. They want to be the Chick-fil-A of multifamily syndications. I'm like, you know what? That's a great way to picture it. I love those kind of comparisons. So I like it.
That's fantastic. Well, for anyone who's not following you already, wants to reach out, tell you how inspired they were from this podcast, what's the best way for them to get in touch with you?
DIY Invest Her, HER, Jacqueline.
Go follow her on Instagram. If you already follow Bigger Pockets, I'm sure you've seen her videos. That's how we found her. So if you enjoyed this episode, if you hated this episode, leave us a review. We love all reviews. Google, Spotify, Apple Podcast, our own website, therealfi.com. Go check it out, and we will catch you next time. See you guys.
See you guys.
Thank you for listening to the Real FI podcast, where you learn from the investors that have lived the hard lessons for you. To connect with us during your pursuit of financial independence, be sure to join our community by following us on Instagram or emailing us at info@therealfi.com. If this content made you financially, mentally, physically, or spiritually richer, please make sure to leave us a positive review on your preferred content platform. Cheers to kicking the 9 to 5.